All right, once again here with the San Diego real estate market update for February, where we'll be discussing how inventory, sales, prices, interest rates are doing, and the list sales price ratio, and also talking a little bit more about the luxury sales market and the inventory, the sales for the luxury sales. Again, this is Clemens Ruas with the Romero Ruas Group at Berkshire Hathaway, and here we go. All right, so interest rates actually decreased a little bit from 7.24 last month, around 7.05%. Compared to that same time last year, we were at 6.96%. Now, the Fed did come out in their meeting in January 29th, and they did not reduce the federal funds rate. Again, it's not exactly tied into the 30-year fixed rate mortgage, but sometimes you can get an idea of where rates are going. Obviously, they didn't cut the rate this past month. They maintained it around I believe it was 4.5%. And it's estimated that they will maintain that for the next meeting in March. So basically, they're saying that the Fed is not in a hurry to lower the interest rate, and it paused it to see the progress on inflation. They said the economy continued to expand at a solid pace and that unemployment has stabilized at a low level. The labor market conditions also remain solid, and inflation remains somewhat elevated, and it removed the reference to ongoing progress towards the 2% target rate. So more than likely, interest rates for the federal funds rate will remain a little bit around the same, around 4.5%. Unless there's other economic indicators that the economy is not doing so well, that might be an increase on the unemployment rate or a decrease in the inflation. So with that said, inventory actually increased around 7.14%. As expected, usually we hit that bump down in the winter months. Everybody kind of stops putting their properties on the market, and we will see an increase in inventory starting in the spring months. And then compared to that same time last year, we saw that trend was at 11% increase from the previous month. So it'll be interesting to see if we get a lot more inventory this year, since that is not showing to be the case just for this January. Compared to that same time last year, though, we are about 4.5% higher in inventory this year. Sales actually increased about 22% since last month, around 1,087. Compared to that same time last year, we had a 36%, so even a bigger increase. And compared to that same time last year, we are 2.3% less in sales. So that's also going to be something that's going to be interesting to see. Obviously, if interest rates do come down, we expect sales to probably increase. Home prices actually, they can't really find directions. They're going up, down, and up and down every month, depending on the interest rates. So they only increased about 0.7% last month. That's about $593 a square foot, or $1,048,000 for a median priced single-family detached home in San Diego County. Compared at the same time last year, we had a pretty big increase of 4%. We were at $570 a square foot, which is actually about 4% less than we had this past month, which 4% increase over the whole year is not really that good, but it is in line with kind of like your normal 3% inflation. Market time is increasing about 11%. We're at 38 days on average on the market. Compared at the same time last month, we were at 34. Compared at the same time last year, we were at 29. We can see that difference was around 16% for last year, which brings us up at 31% more time on the market this year. The difference between the list to sales price ratio actually increased a little bit to 97.4%, meaning there was some more buyer activity that were probably offering a little bit more or not negotiating as much. We were previously in January from 98.4. So that's still a little bit more favorable towards the buyers. So the buyers may have an edge depending on the property. Obviously, there's still very little inventory, and but with the interest rates, it's not helping buyers come to the table and make offers. Now for the luxury sales actually increased about 30% from last month. Compared at the same time last year, we were at 165, which roughly around the same about this month. We did have an increase last year of 81% from the previous month. This year's increase is only 30%, but it'll be interesting to see again what luxury sales hold. Active listings also increased about 4.5. Again, that's probably in line with the beginning of the year. We're gonna keep seeing this this inventory increase, just like we saw last year. See this curve going, and finally probably finding its peak around the summer month. Compared to that same time last year, we had a similar increase in inventory, about 4.7%, and we're about the same in inventory from last year. And thank you very much for watching this real estate market update for San Diego County. If you do have any questions about a particular area, please don't hesitate to contact us. Obviously, different areas are more or less desirable depending on the community and the school district, location, right? So again, don't forget to track your home's value at www.mysandiegovalue.com. My name is Clemens. Thank you very much for watching. We'll see you next month.